Okay, good afternoon, everybody. Let's go ahead and get started. Let me know if you can hear my audio and see my screen in the chat box. Just give me a little Y or yes there. Just let me know that it is working. Hope everybody's had a fantastic morning or afternoon. Obviously, today was a great day, really exciting day in the markets. Just a great way to go into the weekends with profits, right? Can't complain. Um, Anyway, so we'll wrap up today with doing a little bit of basic training. I want to welcome everybody here live. Good to see you, Roger. And also want to give a shout out to everybody in the recording. Want to say hello to you. Also want to say hello to you, all of those of you on YouTube. Just want to say hello to you and welcome you here today. I'm excited that you would join and take your time to spend here. Let's go over our disclaimer. As always, I need to remind you guys about the risks involved in this market. You can lose all or more than your initial investment if you're not careful. So please be aware of how many pips you're risking on each trade, in addition to how big your lot size is and ultimately how that would affect your account if you were to lose money. So make sure that you're going through that process each and every time that you take a trade. All right, guys. So basic stuff I want to go through today. I just want to talk about like what the Forex market is in general, how big it is. I want to talk about um, like who trades it, who are the big players in the market, so that you understand your position and that you understand the position of other banks and other individuals and what each person's objective is when they come into the market to trade, which will ultimately help you understand your position and how you can make money in this market going forward. Also want to talk about when the market opens and closes, some tips and tricks on how you can manage rollover, weekends and things like that, because obviously that's super important to understand, especially when you're brand new. And then the last thing I want to talk about is just kind of going over the different pairs, the different currencies that are traded and how you can understand the difference between base and quote and so on. So we'll kind of start with that. But to kind of get started here, just in very basic stuff in general terms, like what is the Forex market? So Forex market is just basically a, not like an acronym, I guess they call it a portmanteau. I don't know how to say that word right there, but Forex stands for foreign exchange. So it's a foreign exchange market. That's where Forex comes from. It's also known as the FX market. You may also hear it be called the currency market, which is literally the, like, how, in simplest terms, Forex is the market of money. It's of just currencies. You're just buying and selling currencies around the world at once. You're buying pounds or euros, and then you're selling those euros or selling those pounds to purchase another currency, right? And you're doing that because you're trying to make a profit, because you're trying to not necessarily guess, but yeah, speculate on where the market might be going. Is the euro going to go up? Is the pound going to go down? Like, we're trying to figure out which one is which, and then how we can take advantage of that. Okay. Um, so let's see. I was just going to say, so this market, this is kind of crazy, pushes $6.6 trillion in a day, which makes it the largest market in the world. So you hear about the stock market, you hear about the commodities market, crypto market, doesn't even compare. I think the stock market moves about 60 trillion or $60 billion a day, which is just so much smaller in comparison to 6.6 trillion. Again, that's trillion with a T we're talking about. And 6.6 of them every day. I remember when I first started trading Forex back in 2013, that number used to be about $4 trillion in a day. Now it's closing in on $7 trillion in a single day. So, all we're not looking to take all of that $6 trillion, right? We're just trying to take our little slice, right? Our little slice out of that. But that, just to be clear, that's the amount of money that gets pushed through the foreign exchange market. That's the amount of money that gets pushed through. That's not necessarily how much is profited or lost. I mean, that's not even close. If you guys know, I mean, when we take trades, for example, all the trades I took last night and held into today were about $2 million of volume. Okay, so I pushed around $2 million of that 6.6 trillion in the market. So obviously my 2 million's not even close. I mean, it's nothing compared to what's being pushed in the market. But you can make a really a good living pushing just a couple $1 million, even just a couple $100,000 a day in this market, and it's a leveraged market, so you don't need millions of dollars to move millions, right? You just need to learn the skill and so on. And anyway, we'll talk more, but anyway, it's just an interesting concept because that's how much volume is in this market, and it's a lot. Okay, so who trades Forex? Obviously, you and me, we trade it. You've got, let's see, I'm just going to read this here. Market participants use Forex to hedge against international currencies, interest rate risks, to speculate on geopolitical events, and to diversify portfolios among several other reasons. Major players in this market tend to be financial institutions like commercial banks, central banks, money managers, and hedge funds. Global corporations use Forex markets to hedge currency risk from foreign transactions. Individuals, retail traders, which are people like you and me, are a very small relative portion of all Forex volume and mainly use the market to speculate and to day trade. So here's one way of looking at it. 95% of traders are retailers. So these are people like you and me, but we only control about 5% of the capital that pushes through this market. And then 5% of traders are multinational banks. They're the corporations, commercial banks, things that we just talked about. But they control 95% of the capital in the market. So big difference, right? So as far as understanding your position, because that's one of the things I wanted to accomplish today, and just to kind of clarify and help you guys through, is understanding who you're working with, right? So obviously you're working with me. I'm another retail trader. You're working with other retail traders when you come into the classes and learn to trade with me. That's what you're trading with people like that. Now, keep in mind we're trading smart money concepts, right? We're using supply and demand, all that kind of stuff. That's the kind of stuff that the banks are looking at. They're using supply demand zones, and they're trying to figure out as well where the market's going to go. They're not always winners either. I don't want to say that the banks are like this, like they win 100% of the time. They don't. But they do make money, and they have to make money in order to stay in a business. And so for them, the easiest way to make money is if they can take your 5% of capital, because it's harder for them to take money away from another bank because they're also cutting edge. They're also really good at what they do. So they try to implement tactics to take away our capital. And we've talked about that. We talked this morning about this very concept on how we go about trading, how we go about to avoid these traps and ultimately take advantage of them. Okay, so really interesting thing there. I've always thought, for my time trade from my 10 years in this market, I've always thought this is such an interesting thing that we represent such a small sliver, but we're the ones who talk about Forex. We're 95% of us are retail traders, which is kind of interesting. Okay, so when is the market open? So it opens at 5 p.m. Eastern on Sunday, and it actually doesn't close all week. Like, it's open all week long and closes 5 p.m. Eastern on Friday. So today's Friday. We're at 2 p.m. Eastern, just past 2 p.m. Eastern. So this market's going to close in a little less than 3 hours. Now, at the same time, it's going to close in 3 hours. So technically it's still open. Could you take more trades between now and then? Yeah, definitely could. But is it worth trading? No, definitely not. When you hit the afternoons, the trading slows down quite significantly. Most of you know I live in Mountain Time Zone, and so I'm 2 hours behind New York. By the time New York goes to lunch, it's basically done. Now, there are a few things that happen afterwards, but the big moves already happened, okay? Rollover is another thing to consider. So rollover is an even slower time in the afternoon. This happens at 5 p.m. Eastern. For me, it's at 3 p.m. Mountain Time. Between 3 p.m. and 4 p.m. Mountain, or 5 p.m. Eastern to 6 p.m. Eastern, that is the slowest time in the entire market throughout the week. And the reason for this is, technically, even though the market's still open, there really isn't it's the 1 hour in the entire day where there's not a market in session. So at 6 p.m. Eastern or 4 p.m. Mountain Time where I live, the Sydney market opens. Okay, so it opens, and it's about an hour after New York closes. And so every day around the world, every market's taking turns. Okay, so when London opens, they do their thing, and then they kind of hand it off to New York, and New York kind of runs the show for the rest of the day. There's a little bit of an overlap with New York and London. It's like 4 hours long. There's an overlap where London and New York are open at the same time, which, by the way, that 4 hour overlap, the New York-London overlap, is the most volatile time of the entire market. So if there's going to be any time where you can catch really great spreads and the commissions are lower and the movements are big, it's usually going to be during that time. It also happens to be the time where most news events are released, especially here in the United States. So you're going to see a lot of news events come out during that overlap period, especially Canadian and US news. Okay. And then after that overlaps over, London closes, New York kind of goes to lunch, and then it's kind of over as well, so New York kind of has a 4 or 5 hour period where they do their thing, and then the markets are done. So when we trade markets, it's important to understand when they're open, when the volatility is there, and when it's not. Okay, so if you're looking to make big moves and get big profits on trades, a lot of the times that's going to have to be done when the volatility is there. And that's, again, for me, that's usually between, if I want to trade in the mornings, I need to look at around 6 a.m. to about 10 a.m. is about what I have. If you live in New York, you're going to be looking at 8 a.m. to about 12 p.m. is about how far you have. And then that's kind of it for the rest of the day. Now, at the same time, if you wanted to get up earlier, you could, because the London session is kind of the king session, in my opinion. As far as stocks go in this world, the United States is the kingdom of stocks, right? We have the greatest stock market on earth. No offense to anybody outside this country, but there's a reason why countries around the world send all their money here to invest in our stock market. It's the greatest hedge against, inflation with the local currency. If you lived in Argentina and your currency is devaluing, a great thing you can do is convert your dollars, your pesos in Argentina into US dollars. And if you can take it a step further and find a way to get those dollars into our stock market, that's the best way you're going to build wealth in Argentina. So, and there's a lot of reasons for that. We're not going to go into all the reasons behind that concept today, but the thing I was bringing up is, in this country, our stock market is the king. Other markets, London has a stock market, Germany has a stock market, Japan has a stock, China, they all have their stock markets, but they're just not as good. They don't earn as much money. They don't have as many dividends like ours does. You just don't bet against our stocks long term. So if you're looking at the worldwide stock market, New York is the center. So whenever New York opens, that's when you're going to see most of the volatility across most of the other markets. If the London stock market's open late, it's probably going to still be volatile because New York is still pumping. Now, with that in mind, the global currency market is more or less, I would say, London. London's kind of the unofficial, London is the unofficial, how do you want to call it, Forex capital of the world. If you come to the United States, probably New York or Miami is kind of like your Forex capital here. Probably New York is more the official capital. of Forex here. And then there's other places like Singapore, you've got Hong Kong, Tokyo, Sydney. Those places are other Forex hubs, and they have their own opening and closings, right? If you go back into Europe again, Brussels has they open about an hour before London opens. So for me, the London market opens at 1 a.m. in the night, in the early morning, I guess. That's when London opens. So it's very inconvenient for me to trade that. And if you live on the East Coast, if you're in the Eastern time zone, London opens at 3 a.m. So it's really, really early, right? So a lot of the times, if I want to trade through London, the only way I can trade through London is if I put in my pending order. So I'll put in a limit order, I'll put in a stop order, whatever I can do, maybe a market order, if I know which direction I want to go, and I just have to trade the direction I think the market's going to go through. I'll just place my positions beforehand, and then I'll go to bed, and then I'll find out how they did in the morning. That's how I made all these profits from last night, as you guys recall. Here, I'll pull it up here. Did really, really well last night. Let me pull this up here just a second. Here it comes. Yeah, I ended up making 4.5% on my account last night. It was, just for the record, a very particularly good day to trade. We had a lot of things just go in our favor today. Granted, we had been working a lot of these trades for the last couple of days, and today everything just came to fruition. So I ended up making about 468 pips across like 5 or 6 trades and a 4.5% return on my account. Not a bad day. But most of that profit came from the London session. So I got up this morning, probably a couple of hours into the New York session. The money was made, right? So that's why I try to teach people, and that's why we try to post a lot of signals on how you can trade through these sessions so that you don't have to necessarily get up and trade, and get up in the middle of the night. I used to do that. I actually had a strategy in college for a while where I would get up in the middle of the night. It really drove my wife kind of crazy. I'd get up at about 10 minutes before London opened. It was a London Open trade. And so around 12:50 in the morning, I'd get up, go to my office. I'd plug in a trade based off of what I was looking at so that that trade could be ready to go as soon as London opened at 1 in the morning. And then I'd usually hold that trade for about 10 or 15 minutes. So I was at my computer for about 30 minutes at night. And I would just get up, and some nights I could make several hundreds of dollars doing that. Other nights when it didn't work, it kind of stunk because I would go to work, I'd get up in the morning, and I'd lose a couple $100 instead. But it was always kind of fun doing that for a little bit because most nights I'd be profitable, and I just got up in the middle of the night and just pulled $300 or $400 out of the market. As a college student, that was pretty fun. But again, it always stunk if what I was doing, my strategy didn't work. I'd wind up losing $300 or $400. And so I just got up in the middle of the night just to lose. So that wasn't always too fun. But most of the time it would work. But now I don't do that anymore. I have other systems and strategies that I trade through the London session, but I've got them all ready to go before I don't have to get to the charts in the middle of the night because they're already set up, which is kind of nice because your sleep is important. It's really important to get that sleep. Okay, back to this. So rollover is important to understand. And we already talked about this a little bit, but I just don't even trade in the afternoon, guys. And I wouldn't recommend that you do it. You're not missing out on anything. The afternoon is time to work if you've got a job, or the afternoon's time to do your other chores around the house, or it's time to study the charts and learn as much as you can learn. That's what the afternoon should be used for. There is not, in my opinion, there's really not a lot of money to be made in the afternoon. And you can go ahead and try, But the thing is that I've learned is the spreads widen in the afternoon and you have less volatility, commissions are more in the afternoon. And what ultimately ends up happening is if that trade doesn't work out, you tend to lose just quite a bit taking trades in the afternoon. And yeah, anyway, I just don't do it and it's not worth your time. Um, it's up to you though. But like I said, I've been trading for 10 years and I feel like there's way better ways to make money than trying to force a trade in the afternoon. Okay. So basically routine is, on Fridays like today, hopefully the money's made by the time you wake up. And if not, you can kind of wrap a couple of things up for a couple of hours in the morning to trade. You can take a few more trades if you want to in the mornings, but that's kind of it. In fact, today I don't even think I took a trade because all the trades I took were trades I set up, you know, yesterday, 2 days ago. And now they're finally, we're finally making money on those. So, okay, so now we need to talk about, okay, and actually real quick thing about this. So the market moves in sessions. I didn't write this out here. So there's the, let me do this. So the Tokyo session opens at, I'm just going to write this out, 6 p.m. Actually, before that even, first session of the market's technically, first session is Sydney. Sydney opens session opens at 5 p.m. Eastern. Okay. Tokyo session opens at 6 p.m. Eastern. Okay. And actually, let me also put the closes right here. And closes at midnight. Well, that's for Mountain Time, but it closes at 2 p.m. Actually, does Sydney close at that time? No, I got this messed up. So this is actually 6 p.m. 6 p.m. because it opens at the end of rollover. This one opens at 7 p.m. There we go. And this one closes at 2 p.m. 2 a.m. sorry, Eastern. There we go. Okay. Tokyo opens at 7 p.m. Eastern and closes an hour later. So it closes at no, I've got this one messed up again. Sorry. This one because it's 2 hours later, so 8 p.m. and then this one closes at 4 a.m. Eastern. There we go. Yeah, I got that right. They're 2 hours apart, so they open 2 hours apart and they close 2 hours apart. So what's nice is if you live in the United States, you can trade Sydney and Tokyo, but you'd have to trade them, around dinner time, maybe after dinner too. There's going to be some good opportunities to trade the Australian dollar, the Kiwi. You can trade the Japanese yen. That's a great, you could find evening strategies that have significant volatility around those times if that's something that you wanted to do. Okay. And then the next session is London. I don't know why I don't need to capitalize these. And it opens at 3 a.m. Eastern and closes at 12 p.m. Eastern. And then the last session, so a market basically has 4 different main sessions. And then the last session is the New York session. And it opens at 6 a.m. East, or well, it's my 6 a.m., but it's 8 a.m. Eastern. And it closes at 5 p.m. Eastern. Okay. Stocks are a little different. In the stock market, in the US stock market, it opens at 7:30 a.m. So the US currency market is open an hour and a half earlier than the US stock market, just so everybody knows. Got to make that clarification here. And the New York currency market opens an hour, or excuse me, closes an hour after the US stock market closes. So the US stock market, if you think about it, it's not open for very long. It's open from 7:30 in the morning my time to 2 p.m., which is 9:30 in the morning to 4 p.m. I don't know why they take so long. It's like everybody just sleeps in over there. All the stock traders just sleep in. Like 9:30 in the morning, come on, that is so late. So that's when, yeah, I guess they just take their time reading the Wall Street Journal, drinking their coffee and getting their orange juice and working out. And then they finally decide to go trade, I guess. I don't know what they do, but that just seems so late over there. For me, like I said, for me, it opens at 7. Maybe they do it because they're trying to be nice to people like me. Like, and if you live in California, if you want to trade the US stock market, it opens at 6:30. So maybe they're just trying to be nice to the rest of the United States. They're like, hey, we can wait until 9:30 and you guys can all get up earlier, I guess. I don't know. I have no idea why they do it. I'll have to check into it, but it just seems really late. But this one's a little more natural, like an 8 a.m. open for the Forex market, and it closes at 5 p.m. So, okay. But as you can see here, there's a roll, like you can see everything is open. There's something open 24 hours a day except between rollover, right? Because rollover is for an hour right here. And then, yeah, basically there's nothing open during rollover. So here's what happens during rollover. If you guys haven't noticed this already, during rollover, if you have trades open, you might be charged what's called a swap fee. A swap fee is what it's what your broker charges, right? For holding different currencies. So different currencies have different interest rates as to which they charge. Sometimes you can actually get paid a swap fee because you're holding different currency pairs, like the type of currency pair you're holding. The exchange that you have actually has a favorable swap fee. So I'm trying to think of an example of this. So like, let's say the pound is paying, 2% to hold the pound, but the franc is charging 1%. So you have to pay that 1% fee on the franc, but you're getting 2% back. So you actually make money. I would say most of the times I lose money if I'm during rollover. And it just depends on what swap is. You can look up with your different broker how much they're going to charge you on swap fees. So a lot of the times traders try to close their positions before rollover if they can, just because they don't want to have to pay the swap fee. But it's up to you. I actually have a broker that doesn't charge it, but it's because it's a prop firm and they just set up it's one of the prop firms I have an account with. They actually don't even charge it, but others do. Like my FTMO, I've noticed charges a swap fee, and that happens at rollover. And another thing to be careful of is some prop trading firms don't even allow you to hold overnight, and that sometimes is considered overnight. Rollover is like holding a trade overnight. So like with FTMO, they actually don't, on their live accounts, they don't want you to hold during rollover unless you have a swing account. So they have different types of accounts you can have. And if you're the type of trader that holds a lot of trades through rollover, you're going to want to get a swing account and not their regular trade account because, yeah, it can cost you a lot of money. So they also have rules, and you have to check which prop firm you go with. So while we're on this subject about when a market's open and when it's not, FTMO does not allow you to hold trades over the weekend on a live account unless you're on their swing account. But if it's a regular trading account, they're not going to let you, you'll break the rules and they'll take your account away if you hold a trade over the weekend. So that's important to remember that some places do that. I sometimes hold trades over the weekend. At the moment, the only trades I'm holding over the weekend are pretty much my swing trades that I've sent out to you guys, but I don't have anything else open. Everything else I've closed. And I'm pretty much situated to go into the weekend with my trades, and on Monday we'll look for some new setups pretty much, right? Okay, so I think that covers that. The last thing I was just going to talk about, and we've talked about this before, is that the market's traded in pairs, currencies and currency pairs. So in this market, let me actually fill this out real quick. We have I think it's 8 majors. So you have USD, you have the CAD, the Euro, the Pound, the Franc, Aussie, Kiwi, and Yen. Okay, so I'm not sure how many that is, but okay, so those are the total currencies that we trade, and these are known as majors. Okay, so let me actually put this down. These are the majors. There are other currencies out there, like and then actually let me do this. So yeah, let me copy this and I'm going to show you, not that. Here. Okay. So then there's also major pairs. Okay. So major currency pairs are usually anything attached to the US dollar. So the most common currency pair is the euro dollar. It's the most traded currency pair in the world. It's the euro dollar. Okay. Then the next most common, I think, is the pound dollar. There's a few others. Another really common one is the pound yen, GJ. And then there's other ones like, I don't know, just your Aussie dollar. You've got the Kiwi dollar. Oh man, the USD yen, these are majors. USD franc, that's a major. USD CAD. I would also say the euro yen is a major. A lot of people like the euro pound. Okay. Those are major currencies, okay? And there's a few others in that list, okay? When we're trading currencies, we've talked about this before, but I want to make sure those in the recording get this. When we're trading currencies, we're trading one currency against another currency. So you're pinning one against the other. So basically, if you buy the euro dollar, this is the most common currency pair in the world. If you buy this, you're basically buying euros and selling dollars. Okay. Do you have to have euros and dollars in your bank account to make that happen? No, that's what the exchange does. That's why it's called foreign exchange. When you're exchanging and making a trade, it does all this work for you. So you buy euros and sell dollars. If you want to short that currency pair, you want to sell euros and buy dollars, you can do the same thing. Just put in a short, you're selling euros now, and then you're subsequently buying dollars as a result. And you might be like, well, I already have dollars in my bank account. Am I good? Well, sure, but the thing is, you're trying to create an exchange against the euro because we think that the euro might go down and that the dollar is going to go up, or vice versa. So that's how you're using, these are also known as instruments. So they're pairs or instruments. So we're using this instrument to achieve a goal. We're using this instrument to achieve another goal. Okay. Let me show you some examples of some exotics. So, and I think there's an official name for this. And if you're on YouTube, let me know in the chat box, in the comment section, what you think it is, and correct me if I'm wrong. But there's also exotic pairs, right? So exotics, I've kind of grown up learning that exotics are a lot of different things. I like to call there's exotics, and then there's also tier 2. There's tier 2 currency pairs. So I'm going to call this tier 2. So these are akin to the majors, and then there's just exotics, okay? Okay, and what happens is when you go down this list and you're trading these different pairs, you don't get as favorable spreads and things like that, and there's a lot more manipulation from what I've understood. So let's actually go through this list here. Let's type some of these out. So tier 2 would be something like, I don't know, like the euro against the Aussie. Okay, that's a tier 2. CAD, I don't know, yeah, CAD, franc, right? They're all major currencies, but they're pinned against something that's not as fluid like the US dollar. Okay, maybe like Aussie franc or something like that. The euro against the franc or something. How about the Kiwi yen, right? Those are some examples. Okay. Exotics could be something like, I don't know, the Mexican peso, MXN against the dollar, or I can't know if it's like the reverse, so MXN, something like that. Then there's Russian ruble. I don't know what it is, probably USD against ruble, something like that. There's also the Indian rupee. I don't know which one that is, maybe US dollar against rupee. So those are some examples of some exotic pairs. I've also heard people call these tier 2s as exotics. You might want to, those could be considered exotic pairs. So I could be messing that part up, but these are ones I've actually never taken a trade on the US dollar against Mexican peso. I've never done it. Might be kind of fun actually. In fact, let's go to TradingView. I wonder if you can. I'm just curious to see if you can. USD MXN. Uh, maybe just Mexican peso. There's Bitcoin against Mexican peso. How about Forex? Yeah, here we go. Here's the Mexican peso against the Japanese yen, and here's, yeah, USD MXN. Here you go. Here it is. This is the daily chart. Was this an election? What happened here? Well, that's COVID or something. The US dollar just went up, peso down. Now it's dollar down, pesos up. So it's 18 pesos to a dollar right now. It's like 18 and a third, 18 and a third pesos to 1 US dollar. What does this chart look like? I've never looked at this, so this is actually kind of fun for me to take a look at. Here it is over the last, I guess, since 2009. So this is like what you're seeing is inflation on the Mexican peso, because since 2009 and 2008, you're seeing the US dollar, which is the base currency, increasing against the peso overall, right? US dollar is going up, peso is going down overall. At the moment though, it looks like the peso's actually been doing a little bit better against the US dollar over the last since basically the pandemic. We'll see how long that lasts though. So kind of an interesting thing to see. Okay, cool. So those are exotics. And then actually I just real quickly, I'm curious. I wanted to see if I can find the Russian here it is. Yeah, USD ruble right here. Boom. This spike right here was the when they invaded Ukraine right there, and then it obviously pulled back. So what initially happened is you can see the US dollar strengthened against the ruble because the ruble tanked. So since the ruble tanked, that's why this one went up. So dollar's going up, ruble down, but then it reversed the other way. They overreacted and then it reversed the other way. Now it's back to about where it started pre-war. So kind of an interesting thing here. So But yeah, anyway, just kind of fun to see. Like, and again, this one's very similar to the Mexican peso. Like this thing, you can see with the Russian ruble since the 90s. Obviously, the US dollar has been going up because the US dollar is the base currency. And then the ruble, Russian ruble, is the quote currency on this. And so, again, you're just seeing US dollar dominance on here. The more this thing goes up, the more the US dollar is dominating the Russian ruble. So it's just kind of an interesting thing to observe. It's actually been pretty steady, other than this spike here. It's actually been pretty steady otherwise, overall. And there was a period where it was steady right here for a time. I wonder what happened in 98 that caused that spike right there. I was 4 years old when that happened. I don't know. I'd have to go check. And then there's this one right here in October oh, this must have been Crimea right here. That's what this is when they took over Crimea. Anyway, just kind of an interesting thing to see what's going on with this. Okay, so do we trade those? Again, I've never taken a trade on the Russian ruble. I think it could be fun. The next time we want to speculate pretty hard on something, maybe we do that. But yeah, anyway, just kind of an interesting thing. Yeah, this is recorded, Roger. So you can come back and watch this. And also for those of you on YouTube, if you're watching this still, there's a link below. I told you we've had a really good week. We took a lot of really great trades. All of these trades were posted, all this 4.5% that I made today. These were all trades that I posted for my clients to take. I give out a couple of free signals a week, kind of freebie signals that you can grab. There's a link to that below. But also, if you are interested in coming to these live trainings and you want to come and actually come to the live trading room where I take these trades, and then actually take the trades in my premium signals channel, you can do that. I offer a 14-day free trial. There's a little link below where you can start coming to these things and start taking some of these trades. So you'll just want to click that link below and start your 14-day free trial to start taking some of these trades with us. And that's in the section below. So, but other than that, I appreciate your attendance today, guys. Thank you for coming. Have a super fantastic weekend, and we'll see you guys on Monday.